Right, gonna put a little trade on, back up my big mouth.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I'm the big fella. Is the Scruffy Trader. And sitting next to me is Wonder Wink, the Scruffy wife.
I am not Scruffy.
Nah,
I
she's
am the
not
wife of Scruffy.
She is a scruff, really. But I wish she was a scruff. I wish she was a scrubber. I really wish she was a screw.
I'm not even going there.
In a good sense, because the kitchen's disgraceful. She needs to clean it up. Right. I'm gonna pull a chart up. And why is that? Well, because I like to help the guys in the squad, and there's no point saying you're going to do something unless you back it up. All right. Now, every morning I make up a strength sheet here, and this strength sheet will tell me products that are potentially good trades for the day. All right. Now, it's pulled out the Aussie dollar here, so I'm interested in that. And I take it kind of a step further where I then break it down into the products I really am going to trade. Now, I have my eye on this basket. There's that Aussie dollar. I have certain instruments that I look at constantly. I have my primary drivers that I always look at regardless. So DAX, FTSE, cable, gold, Eurodollar. I'll always look at them. And if I see stuff, I'll put them into the sheet. And then further down from this, I'm then looking for additional content.
Sorry.
Excuse me. A woman in demand. Anyway, cut long story short, this one is telling me it's pretty good to go. So I kind of take it a step further where I will break down what I'm doing, which is here. And I tell the guys exactly what I'm looking for before I trade it. All right. Now, this trade looks like it's coming into play right now. So I'm just going to quickly drop an order in. There we go. Okay. So what have I dropped the order in for? Let me just alter that, put that onto that line. Now, what I'm looking to do here is kind of just get it in and out relatively quickly. We do have a stalling block, which is here, this level. And the idea is probably to get it to break even at that point, or just pull the trade. I'll see, because I'm only looking for 10 pips. And why is that? Well, it's from that blue line down to the next one, down to there. All right. So let's have a look, see why this might be. Well, this is my fully mapped chart. Just get that out of the way. And I made a decision on it that I wanted to go short. But why? Why short? Well, there's a number of reasons. We just even come out to the daily. What's happened is we've had a huge drive down. It's pushed up, thumped down, and now it's pushing up aggressively. And you would think to yourself, right, okay, big boy, surely the market is moving up. Correct. However, we are on Friday. What happens on a Friday? Well, certainly after a news event, there is profit taking. And there was a mega news event here that forced a lot of people into the market, obviously, which you can see, and they came in here the following day. Well, if they're being forced in and they're trapped, then there's a theory that the bigger boys are going to take profit and the market's going to recede on itself. Why? Because it often does, because anybody who's seen that and was short were trapped the next day forced into the market. All right. Push the market up to take out stops. Boom, 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 boom. Still a lot of activity. And then roll it over. Simple stuff. All right. So let's drop this down into a 4 hour so we can see this a little bit cleaner. Well, what you can start to see now, for all you've had all of these massive drives coming around, all right? There's a hell of a lot of red coming into the market. Red, 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 red. You know, and even this, well, there we are. My order's triggered now. If you're looking at it, just visually looking at it, there's more reds than there is greens, you know. I mean, you can just kind of see it's like dirty candles, if you like. So this all adds weight to the fact that I think this could probably be ready to sell off. I think there's a lot of trapped traders in this. And, well, that's just a hypothesis. It's really just a thought. But if that's the case, it is going to snap off. But also, we've got this bad boy here. And that hasn't receded on itself. It has to. It has to, you know. So that's what I'm sort of working on at this moment in time. There's got to be a pressure release. So let's go further down. Hourly. What else are we seeing? Well, we're seeing massive strong drive. A weak sell-off. A drive that isn't aggressively strong. How do I know it's not aggressively strong? Well, because it's a bit limp-wristed, really, you know. And then thump, sold off, got down into these levels. It's tried to push up constantly. It's not happening. Not really, because it's failing to break the high of this. The red's coming in, so I think there's a good opportunity to go low. Simple stuff. Anyway, let's see if I'm right, because what I'm going to do is I'm going to stage it from here up to around this area up here somewhere and see if we can make some money out of it. All right, catch you in a bit. Okay, guys, that's that leg of the trade complete. I can go back to market if I so wish. I possibly will do later on today, but only up to about 12 o'clock. Why is this? Well, it's very simple. It's because I don't like to outstay my welcome. And as I was saying at the beginning, possibly badly, it's Friday. There's a lot of unpredictability on a Friday, and that's what I was edging on today. It's kind of to put it into a sort of a way of thinking. I don't like to trade Monday mornings. So before 12 on a Monday, I don't like to trade because the markets are very erratic and it's where the money is getting positioned. And it normally goes one way, then it goes the other. And it's a bit of a crapshoot unless you know what you're looking at. Friday is the same situation because instead of money coming in, it's money going out. And after lunch, again, it goes a little bit haywire. So the trick is always set on your plan, you know, like what you've seen here. I'd made a thesis of what I think has been going on over the last sort of couple of weeks. And what I think may happen today. Now, the catalyst today was the news event a couple of days ago. All right. Been watching all of this, and then I can see the spurt. And then from that spurt, there's going to be some kind of a retracement because there has to be. Nothing can move in a single direction forever. There has to be some kind of pressure release. So you just put all of your sort of ducks in a line and you think, well, this is what I think is going to happen at a given time. That's the art of trading. And all right, it's great for me to show you doing 500 quid in a go. you know, 1,000. Or I can sort of live in the land of make-believe, you guys call Instagram, and put up I made 500,000 this morning. What a load of bollocks, right? I did a thoughtful plan, put in the correct position size to my account, etc. And it pulled me 28 quid. Now, you might scoff at that. And plenty do, you know, and quite frankly, I don't give a shit, you know. But it's 28 quid that I earned honestly and is mine, you know. And the ones who scoff and fuck up and believe in Instagram. So there you go. Anyway, cut long story short, I followed a plan. That is the basis of any trades. Now, my videos are predominantly me trading because all I ever do is rinse and repeat. You know, I follow the same plan religiously every day. And because I don't jump around the markets, it keeps me consistent because I'm looking for the same things day in, day out. And those things that I look for are repeatable. You know, are they set in stone? Of course they're not. Nothing's set in stone. But if I filter down the markets to the one that is set up meeting the criteria, I size appropriate, in other words, not too stressful, so I'm calm, don't get worried by it, and then I just follow what I'm looking for, and it is that simple. Now, I know some don't get it, and they probably never will. But that is trading. That is the art of trading. It's looking for just simple criteria that you know works. X does not mark the spot. You know, I've asked that a few times. Is there sort of, right, when this moving average crosses that moving average and all this sort of stuff, when do you get in? When do you get out? How do you place your stop? How do you place your target? Well, it's very simple, guys. Common sense. So as a little sort of feeder towards the end of this video is this. I was asked yesterday about stops. Did a webinar for the 5%ers. If you're unfamiliar with the 5%ers, it's the prop firm you see me trade, and they pay me very well off my own gains. All right, and I do stress that when I highlight the 5%ers in the videos, it's because I trade directly for them. And they've gave me an opportunity with a bigger fund than I have to earn decent money. Why? I earned the right to trade. Okay. So the number one question that is asked is stops. It's always stops, because this is the way it's drummed into you, into the sales pitches, etc. Right. Your stop has one job, just one. Right? It's nothing to do with the trade. Absolute zero. All it has to do is protect your account. That's it. Okay. Now, anything other than that, when they start talking about risk reward and all of this, no. To me, that's a fugazi. That's telling you that you're rubbish and you'll still make money. No. What it's telling you is it's giving you an incentive to buy into whatever they're talking about. It's not. In the real world, stops have one job: protect your account. And in the real world, you apply common sense. And if you haven't got common sense and you're looking for a magic pill, please, for the love of God, give up trading. Because if you're stupid and you're looking for just quick money, it ain't happening. All right? This is a job. So I'll go back to that again. Stops have one job. Get that into your head. One job: protect the account. So how do you protect the account? Don't look at it as pip value. Look at it as money value. A stop needs to be where a stop needs to be. It has to be hidden behind something the price can bounce off. It can be a level. It can be a swing point of price. It can be an outer edge of a Bollinger Band. It could be a moving average. But it needs something between you or the price and the stop. You need a barrier. I like to have two barriers because it'll test one And if it goes to the second one, I'm probably wrong. So that's the way I look at it. The distance between the price and that stop is a cost. It's a cost of trade. Okay. You need to work out how much that cost is. And this helps you with your position size. So if you're sort of Billy Big Bollocks and you think you're going to put on this huge position size because you've got leverage, look at how much that would cost if it hit the stop and then compare it against your account. So if you've got £1,000 and your stop is going to be 700 quid, well, common sense is telling you your position's too big. So you half it. So now your stop is in the same place, and the half the position size means it costs 350 quid. And ask yourself the same question. Am I happy with this? No. Half your position size again. Leave your stop where it is, and now this costs 175. Is that acceptable against the size of your account? And if you say yes, then go for it. If you say no, again, half your position size till you are comfortable with that cost. And if you can do that, you'll find trading is so much easier. All right? Why? Because you're trading from a point of calmness rather than fear. So that's just something to put your little grey matter to. And by all means, drop it in the comments. I'm always interested in listening to your thoughts. And if you want to see how I trade and sort of the breakdowns, etc., do visit the Scruffy Squad. I'm there every day pretty much. But even when I'm not there, the guys are in the Discord having a chat and one thing and another. And all of the content is laid out in an easy to find format, because it's all in libraries, etc., and it's all put together. There's over 500 videos that will never be public. You know, in fact, it's closing on probably nearly 1,000 now. And live streams as well, which we'll be doing again this week, where I talk the guys through what I do, and hopefully they pick up a nugget or two, because I do that every other week. I do a live stream with them, and I sit down and I go through whatever they need. And every morning when I go to trade, as you've seen, they get a breakdown before I do it. And why? If they want to trade along with me, they can. And if they don't, at least they know what I was doing before they see the results. Can't be any fairer than that. Anyway, catch you all soon. So as always, guys, trade well, keep your risk managed, but above all, do what you love. The money will follow. See you all in the next one.